You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Education Wednesday. Time to commence our learning here on the old network. It is time for Options Bootcamp. Dare I say it, the premier options educational program. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating Options Insider Radio Network, reminding you have many different ways to engage with Options Bootcamp and indeed the rest of our network. If you like it on demand, on your schedule, on your device of choice, it's pretty much available on every platform under the sun. If for some reason there's one that's missing that you like to use, hit us up, let us know. We'll see what we can do. And then, of course, if you'd like to engage more with the content, we have the Plus, which allows you to get access to the live streams, the live shows, engage right with the host directly throughout the show. No waiting, no middlemen. And then, of course, if you want to go above and beyond, get exclusive content, including our great pro Q&As and options oddities, a bunch of other fun stuff. And you have to go to the pro side of the fence, you know, to go to learn more, theoptionsinsider.com/pro. And wherever you go, however you listen to the show, keep rating and reviewing it if you do like it. It really does help all the new folks discover the content. Of course, if you have a question, hit us up. Let us know. We do love to hear from all of you out there. Let's see who we're hearing from on the show today. I usually call him the black-hatted one, but perhaps today, Mr. Dan, I should call you Dan the Pizza Man, a.k.a. Dan Passarelli, the founder of Market Taker Mentoring and the author of 1 or 2 or 27 options-oriented tomes. Mr. Dan, welcome back to the program. How you liking that, Dan the Pizza Man, sir? I think it has a certain ring to it.
Yeah, well, it won't be the first time that I was called that in my life. But those of you who are listening, I get a lot of emails from people, right? And this guy sends me an email and he says, "Hey, Dan, your last name Passarelli," which he spelled wrong, "is too long. It makes it difficult to remember. Why don't you just call yourself Dan the Pizza Man?" Just like Billy Joel calls himself the Piano Man or Elton John calls himself the Rocket Man. And so, yes, slightly offensive, but still funny, still very funny. And I couldn't help but laugh at that. And so I shared that on my social media for everybody to get a little laugh.
Yes, our keen-eared producers spotted it and brought it to my attention. It doesn't work really on any level outside of the fact that Passarelli is an Italian name. So you're right, a little bit of an offensive racial stereotype. I take offense to that as a vowel holder myself out there. Plus, are you out there making pizza videos? What's I don't get it. Would you go to Dan the Pizza Man to learn about options, or would you want to talk about your margarita pizza?
Yeah, no, I think it's mostly just an ethnic slur, but but I can laugh at myself. So there you have it.
All right, let's see if we can all laugh together. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call, the portion of the show where you guys take the reins, your questions, your comments. We also turn that spotlight back on you with some fun questions out there. Dan, a lot's been popping off in the market since the last time we chatted here on the show. It seems like for the most part, markets have been marching upward and vol has been marching downward. We saw a few hiccups in that recipe over the course of the last week, but that's been the trend for the most part. What's been lighting up your tape out there in the markets and indeed volatility since we last chatted, sir?
Oh, boy. Quite a bit, my friend. Quite a bit. And I just dumped out of some of this workhorse, WKHS. As many of our listeners know, I do a lot with short squeezes. It's something that I've been really systemizing lately. And one of the stocks that popped up on our little machine we built here was Workhorse. And it looked like that could be one of the next latest, greatest short squeeze candidates. And today it was kind of heading up. Looked like it could be the day. And then we get some news about the SEC investigating them. Apparently, one of the people who is a short seller found some sort of I don't know what it is he found, but asked the SEC to investigate apparently, and looks like some of that's coming to a head. So I was actually able to get out of it for a pretty good profit. I sold out about half of it for like 300%, and I just broke even on the other half because it's starting to tank, I guess, as a result of the news. But that's one thing I've been looking at, speaking of pops, because we're always waiting for these suckers to pop. But what else here? Markets, boy, the VIX, holy moly. Would you look at that VIX? Hold on a second. We got to get a chart of the VIX up here. Hold on a second. The VIX, not quite as low as it's been in the last year, but pretty darn close. Got a 15 handle on that sucker. And holy moly, it might be time to start looking at some hedging with some VIX derivatives. I'm just saying. I'm not calling for the market to crash. If I was, I wouldn't recommend hedging. I'd recommend selling and then buying a whole bunch of puts to position yourself for it. But hedging means I think it's probably going to continue a little bit higher, but I'm concerned it might not.
Yeah, 15 handle. We haven't seen that in some time out here, listeners, and certainly not with any frequency since the pandemic began. So, yeah, interesting times we find ourselves in. Speaking of that volatility, let's kick it off. You guys have been asking us for a while, hey, bring back the question of the week. Some of our newer listeners, that's something we used to do all the time on our Twitter @options. Over there is the place to find it. We got busy, as everyone does, with the pandemic and with all the content and so many shows and everything else. And they kind of fell by the wayside. I've been bringing them back over the course of the past month. And it's been fun to see the response. You guys are certainly getting a lot of engagement and value out of it. We asked you last week, we were talking on the show, as you recall, listeners, our question of the week last week was, we've seen a lot of turbulence in the market recently. What do you feel is the main driver of this latest round of volatility? Now, volatility is trending lower, yes, but we have seen turbulence in the market out there overall. What is driving that turbulence? Gave you 4 choices: the Delta variant, Afghanistan, Fed tapering concerns, or overall market valuation concerns. And at the end of the week, it was Fed tapering concerns that took it with just about 55% of the vote, followed by about 20% for Delta variant, about 14% for market valuation concerns, and about 12% for Afghanistan. So not a lot of love there for Afghanistan. But Mr. Dan, does that surprise you that the Fed would take it, or is that pretty much what you were feeling?
No, I don't think I'm surprised. I mean, I can see that. I mean, the Delta variant was in second place. which I would have had it in second place as well, or, it probably would have put those a little bit closer because, if you follow the news every time something's worse with that, or, there's bad news with the pandemic, the market starts to sell off. Same with this tapering scenario here too, though. So, I think this makes perfect sense.
Perfect sense. Indeed. Well, of course, we posted that at the beginning of the week, and everyone was fixated on Powell towards the end of the week. So that could have possibly ginned up the voting for the Fed as well. I'm sure we asked this question this week. Maybe it'd be a little bit of a different story because we seem to have a little bit more of a roadmap on what's going on with the Fed. At least we think we do. We never really do, but we think we do. This week, our question, again, going back to vol and just general levels. We thought we'd ask a very simple question this week. Which level do you think we will hit first? Gave you 4 choices. A VIX of 13, which was a little bit farther away when we posted it than it is right now. Bitcoin of 60,000, so back to the 60K level for Bitcoin. S&P of 4750, so roughly 200 odd handles north of where we are right now. Or gold back to the much ballyhooed 2000 level that, remember, it hit a while back during the pandemic, then kind of retreated off of and hasn't really gotten back to since. Mr. Dan, if you have a vote in this, have at it. And then B, more importantly, where do you think our audience is lining up?
Oh, boy. I'm going to go with Bitcoin 60K. Not that I'm necessarily a believer in its utility or anything, but I look at that one as the most likely to happen first.
You think the audience is that way as well?
Yeah, I do. I think there's just so much excitement, the Bitcoiners, and that crowd, the crypto crowd, there's just so much enthusiasm about it. I mean, don't get me wrong, the gold bugs get a lot of enthusiasm too, but I think they're a smaller in numbers probably.
Yeah, they've kind of been usurped. They used to be the most hardcore of our audience by far, Dan. You besmirched gold at your peril. The gold bugs came at you. Since then, as we'll see maybe a little bit later in the show, since then they've been usurped by fans of some other things out there. We'll get to that in a little bit. Right now, it's leading the dance, listeners. S&P 4750 with about almost 50% of the vote, about 49% of the vote, followed by Bitcoin 60K at about 26%, VIX at a 13, only 16%, and about 9% for gold 2000. Agree, disagree, get on over there to @options. If you're listening after the fact, you'll still have time to vote. This will run through the end of this week. And speaking of really quickly, we snuck another one under the wire here, Dan, because news broke after we posted our question of the week this week. We're always talking, people always ask us questions, what broker to go to, what do you like about this broker or that broker? Rumors hot and heavy this week, Dan, that PayPal is about to enter the brokerage game. They've made some hires in the brokerage space. It seems like the next endeavor for them. So we put out a flash poll about that. That's going away in about 30 minutes, listeners. So if you listen after the fact, you won't have a chance to play. But listen in live, you can still get out there @options, make your voice heard. We asked you quite simply, quick flash poll. Rumors are swirling that PayPal is about to enter the brokerage business. Quite simply, would you use PayPal as your broker? I know the name PayPal comes with some baggage sometimes, so I was curious what you folks thought. And actually, I won't reveal what the results are yet. What do you think, Dan? What do you think our audience? You think they're for PayPal coming in? You think they're no? I'll give you the 4 choices, by the way. I won't confuse you anymore. Here are the 4 choices. The answers are yes, I like PayPal. So you like PayPal, you want to try them out. Or yes, you want to try them out because you're dissatisfied with your broker, you want to try an alternative. Or no, you just don't like PayPal, forget about it, you're never going to touch them. Or no, you're not going to try PayPal because you're happy with your broker, you don't want to switch. So, Mr. Dan, what do you think is winning our flash poll here, sir?
Boy, that is a tough, okay. I'm going to say what is winning is no, I'm pleased with my broker. And I say that because learning a new platform is tough. And when you finally find one, you're just so freaking happy that you don't have to learn a new one all over again, that you don't want to leave it. So that's the one I'm going with for what I think the audience believes.
Yeah, PayPal, I'm not going to like the result of this one because you're right. No, I'm not switching because I'm pleased with my broker. Currently winning with 45.5% of the vote. No, you just don't like PayPal. So your baggage with PayPal is also up there at 27.3%. So you add those two, you got pretty much north of 2/3 saying no to PayPal at all. So that's probably not the entry point PayPal wanted. 25% saying, yes, you would try them. You like PayPal. That's higher than I actually thought. And only 2.3% said, yes, you would switch to them because you don't like your broker. So apparently from these results, options brokers in the space should be quite happy, and PayPal perhaps a little bit nervous at their prospect. Now, again, they're not looking to enter the options game anytime soon. They're probably going to start with equities, then probably maybe add crypto options somewhere down the line. Just thought we'd ask you that one out there because it's the hot breaking news of the moment out there. All right, let's go on out and see what you folks have on the brain. A lot of different stuff, Dan, all over the place as usual, which we love. You know where to find us at Options on most of the major social media platforms. Questions at theoptionsinsider.com. If you're part of the Secret Handshake Club, you get bumped to the top of the line. You also can ask questions live in the live chat there as well. First off, we've got Rhythmic Angel. He warns us. He said, this is slightly lengthy. So here it goes. He says, my thesis is fundamentally based on how institutional hedge mechanisms work and if you can trend follow that mechanism. So he says, let's say the open interest on a strike for a stock is significantly high at a strike above the market for a near expiration. Now, OI itself doesn't say if that strike has been bought or sold, but it's hard to read here, but there are supposedly, I think, ways to get an educated guess as to the direction there. Now, given if a market is long deltas there, institutions will need to delta hedge in the same direction. Now, is it valid that markets will most likely drift to that strike towards expiry? Because if this thesis, maybe he means if this thesis is correct, and you can gamma scalp based on this theory. Many thanks. All right, so if I'm reading between the lines here, Mr. Angel, yeah, this is, Dan, this is kind of a variation on a question we've been asked a number of times. People call it different things, max pain or whatever it is. You know, it is this perception that options have this superpower around expiration to just like a black hole suck the stock to the strike that market makers have a lot of long deltas on. And, you know, we talked about this before. Again, I encourage you to check out some of our archive episodes where we have kind of debunked things like max pain. I've said my thoughts as many times. Dan, I'll let you go first, and then I will weigh in after. So what are your thoughts here for Rhythmic Angel? If there's size OI on a strike above the at-the-money near expiration and the market makers are long deltas there, will that move the stock up, and can you gamma scalp it?
This is... there's a lot of moving parts to this question and to this answer. And I don't feel like, just having lived it and breathed it down on the trading floor, every expiration over and over again for months and then for weeks when we got weeklies on the floor, I find that a lot of people misunderstand it, oversimplify it, and end up getting themselves into trouble. In some ways, even though there's a lot of moving parts, it is kind of simple and straightforward, but let me kind of break this down into a crash course. So whether you're looking at volume or open interest, certainly you have to look at both. And you can kind of note whether in order, or whether a trade that goes up, like you see 1,000 contracts trade, if it's opening or closing. If the volume is higher than the open interest, it's logically got to be opening, right? Or at least partially. If it trades on the offer, we can assume that it's a buy. If it trades on the bid, we can assume that it's a sell. And with any really options-friendly trading platform, you can find that information, but it's often tricky and clunky and incomplete. So that part's a little tough. Now, as for this thing about pinning and how this is related to pinning, which means that on expiration, like at the very moment of expiration, the stock is at a strike price. There's a little bit to that, and I think it's very important to explain why. A lot of people hear about this max pain that Mark mentioned, and the max pain is just grossly oversimplified. Whenever I hear people even say those words, I cringe a little bit, because it's so like kind of misunderstood. Here's how all that works. If there's a lot of open interest at a strike price, okay, and we're getting closer to expiration, if the market makers are long options, okay, they have positive gamma and they trade delta neutral. So that means whenever the stock goes up, they have to sell, and whenever the stock goes down, they have to buy the underlying shares to hedge. And especially when your gamma gets really, really big, like on expiration day, like the market makers in turn can actually, like their hedging activity, they're buying and selling just so that they're delta neutral. It actually forces the stock down back to the strike when it's above the strike. And then when it goes below the strike and they have to buy shares, it forces the stock back up to the strike. So there is, like there is evidence out there that says stocks pin more than statistically they should. And that's why. Now, I wasn't really clear whether your question was from the point of the market makers being long or short options. If the market makers are long options, it'll probably move less than it otherwise would and be closer to the strike more than it otherwise should. If market makers are short options, that can have the opposite effect. Because then when the stock's high, they have to buy shares, to hedge. And if the stock goes below the strike, they have to sell shares to hedge. And that can force it away from the strike price. And that, if you're fortunate enough to be long options, then that can probably create a little bit more volatility and give you a better opportunity to gamma scalp. I know there's a long answer, but I just hear so many misconceptions and myths and mistakes and stuff around that. I want it to be really, really clear. So I hope I was, and I hope that helped.
Yeah, people just have this perception, Dan, that they have these magical powers options and they could suck stocks all over the place. And you hear things thrown around like quad witching and all these very spooky terms. And that means there's something mystical going on out there. Yeah, but for the most part, like Dan broke it down, really, the only time I've really seen these kind of effects really play out is not sucking the strike massive amounts, from where it is trading right now to where the options are. It's more along the lines of what Dan said, when you're hovering around that strike already. The stock's already there at expiration. And then the market makers have to delta hedge around that. That could keep the stock more glued around that strike because of the delta effect. And if you don't know what gamma scalping is, look up that in our archives as well. But effectively, they're buying shares below the strike, selling shares above the strike, keeping the stock around that level. So you could see some of that playing out. But this magical sucking it 30% to go to this other strike just because there's some options there. Most times, again, you can't say nothing's going to happen in this environment anymore because we've all seen unprecedented things every week, but it's very unlikely to happen. All right, next up, we've got JVac. JVac says, hey guys, love the show. Well, right back at you, JVac. Thanks for taking the time to write in. He says, wonder if you can help me out. My friends are long loads of AMC. All right, I see where we're going. We're going right into the meme names. So I say they're nuts, and I stay with limited outlay call spreads instead. That way my entire portfolio can't go to zero tomorrow. My friends say I'm nuts for trading options on an already risky meme stock. They say that I'm adding risk on top of risk and that I'm sure to blow out. Who's right? Isn't trading at the money or out of the money call spreads much lower than owning the stock outright? I think he means much lower risk than owning the stock outright. Thanks for all that you do. You guys are the best options guys out there. Well, thank you. Oh, and Mark's network rocks. Well, thank you for that. JVac, we love you guys out there who take the time to listen and write in and all the fun stuff that you do. For the most part, you're correct, JVac. If your friends are loaded up to the gills on nothing but AMC, that's their entire portfolio, then you're right. They can ride that all the way down to zero. And there's not a lot stopping them short of them hitting the exit and getting the heck out of Dodge. If you're going out there and instead doing, like you said, kind of at the money call spreads or slightly out of the money call spreads, it is a more limited risk just by definition. You only really have the strike differential that you're trading. You don't say exactly which ones you're trading, how wide, that sort of thing. And you also don't say, how many of these that you're doing. I mean, that's another way you could take a limited risk trade and turn it into something more dangerous if your entire portfolio is now weekly 30% out of the money AMC call spreads. That's a different thing. That entire portfolio can go to zero, just like your friends who own the stock. But I'm assuming from your question that you're not doing that you're kind of putting these AMC verticals in their correct allotment where they belong in like the speculative portion of your portfolio. And if you're doing that, then yeah, you should be have a much more manageable risk scenario than your friends who can potentially go to zero. You only have at risk the outlay you put for that call spread. So tell your friends, J-Back, that we said you are the less risky. Mr. Dan, what do you say, sir?
Yeah, I mean, I don't give advice. I'm not encouraging you to do anything, but yeah, keep doing it. Like, look, here's the thing with all these meme stocks, short squeeze plays, you will likely have more losers than winners, like, especially if you're trying to really catch a squeeze, which, with AMC, I think there's a lot of other opportunities than just the pure squeeze play. But there's a lot of money to be made trading those stocks if you're good and if you know what you're doing. Is it risky? Of course it is. Like, all option trading is risky. And is that riskier than other ways of trading? In some ways, yes. And in some ways, maybe no. Maybe it's a little bit smarter than buying the shares or selling puts or, there's different ways you can look at it. And I'm a really, really huge fan of this sort of new little niche of trading. And like I said, I mean, I just took off those workhorse calls that I had. I was just looking at the numbers, kind of multitasking a little bit here, being aware of the market. And it's almost 100% profit. It's a 90-something% profit. And it didn't even have a short squeeze. I just had this on for a couple of days, and the stock is starting to tank. And it looks like this one's not going to be the next golden child, but I was still able to eke out almost 100% on it. So there's a lot of opportunity there. There really, really is.
There you go. JVAC, tell your friends. We said, yeah, you're doing it right, provided you're not going crazy with it. You're doing it right. All right, Dan, let's just to prove we're big boys here. We can take the heat. It's not all love. It's mostly love here on the show, but we can take the heat. Are you ready, sir? Buckle in. This is an interesting one. This person had so much vitriol, he couldn't contain himself to one very lengthy email. He had to send a second immediately after to add more. We can't read all of it because it's so much, but I think you'll get the gist of it once we start going. This one comes from Jason Petrick. He says, I am now listening to the follow-up episode of Options Bootcamp 121, the GameStop Aftermath. He says, you guys are so disingenuous talking about the, quote, voting with your dollars and, quote, allowing the free market to dictate price discovery process. The market has been so rigged against the, quote, free market for years. And as former market makers, I have a hard time believing that you don't know that. That is what this movement, and he puts in parentheses, the ape community, is all about. Maybe Ken Griffin is a friend of yours, or maybe it's just that your moral compass is permanently broken. Wow. Maybe he does hedge a little bit. He says, maybe I'm overreacting. So I will upload the sound bites of your views on market discovery to the Reddit communities and see what millions of them think. He then followed up with more. He said, I used to listen to your shows every week, at least the first 50 or 60 episodes. You taught me most of what I learned about options, and I appreciate that. I had the utmost respect for both of you. I took a long break from options trading because I took too many losses, but I've been looking forward to getting back in eventually. Now here, I think this sentence is kind of the crux of his email here and the crux of his issues with us. He says, now I am long AMC and GameStop, and I'm fully optimistic that life-changing money will be coming my way soon. Because of that, I would become a student of Dan's Market Taker Mentoring. Before that, I decided to listen to everything you always wanted to know about squeezes, which was our episode 120. I can't tell you how deflated I feel. He said the way you demonized us retail traders, blaming on us for disrupting the market. We defend rotten and illegal activities of evil scumbags at Melvin Capital. So he goes on like this for a while. I want to know how you will eventually see yourself when you look in the mirror. All right, a lot to unpack there. Interesting. Again, I think the crux of his of his multiple angry vitriolic emails is he's long AMC and GameStop, and he's fully optimistic that life-changing money will be coming my way soon. And he's very angry that we said something counter to that. And that is kind of what I was saying before earlier. You joked about the gold bugs, Dan. They used to be the ones who were the most aggressive in defense of their position. And then it switched to crypto. Now the meme folks have certainly taken that ball and run with it. In fact, just this morning, an article on the Wall Street Journal calling it the social media stars who move markets. And they say young investors are turning to a new generation of stock pickers, many of them without formal training, for advice. And they say for these would-be Jim Cramers, staying popular means never criticizing a meme stock. And that's where we get to at the end of the day. Look, Jason, I'm sorry. First off, I hope you do find fame and fortune with your AMC and GameStop. And I'm glad you listened to our episodes. I'm glad you learned something. You can't ever give that up. That's always going to be in your brain. Hopefully that will make you a better trader in the long run. I am sad that you have had some losses, and I'm sad that you've allowed that and this position you have to kind of dictate how you think of. You should know, if you listen into our network long enough, you should know we've never had Ken Griffin on. I've never had Citadel on that I can think of. Maybe one low-ranked guy somewhere at a conference somewhere, but really that's about it. They've never been on. They sponsor nothing. I'm not a fan of Melvin and these shorts. So if you've listened for a while, you should know that. But still, I wanted to put this out there because we can take the heat sometimes too. But don't come at us because we said something about a position that you have. That to me, if you have something material, an issue with what we said, or our analysis, or you have a different viewpoint, that's all fine. We like all that stuff. But don't allow your position to drive you emotionally to these levels, listeners. Because we talked about the psychology before and our trader psychology episode before. I know it's hard. Try whenever possible to divorce yourself and how you feel about something and about a person from your stock position. Those two things, they should not be moving in the same direction. That's usually where most of the vitriol comes. And by the way, we never said these companies were crap or going to go to zero. We just said you really need to watch out. In the case of GameStop, it was still is a struggling video game retailer that is struggling to change its business model to a new digital era. The thing that's nice about it now is that they've had a massive capital infusion. So what will they do with that? That could be something that could potentially be life-changing for them. So that was something interesting. AMC, same deal, massive cash infusion. Will that save them in an era where everything's moving to on-demand and digital? We'll see. But it's interesting stuff. So hopefully, Jason and those others out there who are living on the meme tilts, we're going to call them like we see them here on the show. And we don't want you guys getting over-levered, getting into crazy risk, and getting psychologically married to your positions. That's a very dangerous road to go on. I can keep going, Dan, but what are your thoughts here for Jason and the others out there who are, shall we say, deep in the meme weeds, sir?
Yeah. So, Jason, I don't know, from reading your manifesto here, I assume maybe you're not listening at this point. But look, man, I think, if you are, or if there's anybody listening who might be thinking, yeah, I agree with Jason. You guys might have missed a lot of key important things that I have said over time. Because let me be really, really clear. I know I've said this a handful of times on the show, that if there is someone in our industry, in my industry, okay, like I have been a member of the options community for almost 30 years. If there is somebody who is a trader or money manager or exchange person or brokerage person or anybody who's doing something wrong, ripping people off, breaking the law, being immoral, I've got a bigger problem with that person than you do. Believe you me. And I want to see that person investigated, fined, and if the law allows, jailed. Like, I do not want those people in my community. The free market only works when it's free, right? And look, price discovery is a thing, okay? And I have been a market maker. I do know a lot of how the inner workings of this stuff work, and I have heard all the myths and misunderstandings. And I'm telling you, just because somebody has money that they made being a trader doesn't mean they're morally bad, right? Like, look, Jason, you said that you what'd you say, have optimism that you're going to have a lot of money soon or something, right? Like, you want that too. And I understand, at least topically, at least superficially, what the ape community on Reddit is all about, and maybe making money isn't your primary motivation, and like, look, I understand that, all that, but to have blanket statements that say some of the things that you're saying, I mean, it's really just not beneficial. It puts your mind in a bad place, because it's important to have a positive attitude in anything you do in life. It's going to make you more on tilt. It's going to make it harder for you to trade. It's going to make you focus on the wrong things. And look, when the meme stock thing was really super duper hot, and it's still pretty hot, my son, who's young and he is a person in the Reddit community, he was like, hey, Dad, look at this. Look at all these things that these guys are saying. What the WTF? And I was like, well, look, why don't you send it to me and I'll look at it? Because I know that there's a lot of myths out there and misunderstandings and demonization. And I'm not talking about retail traders. I'm the champion for retail traders. Everyone in my community is a retail trader. I'm on the retail traders side. And so I wanted to see, like, what are the folks in the Reddit community saying? And I looked, and some of it was very, very esoteric stuff that I had to, I mean, some of it was right in my wheelhouse, but some of it was stuff I had to look up. I had to contact one of my friends who runs like a trader watch group organization, right? Like one of the guys who's on your side and my side, championing the retail trader against the bad guys who could do something wrong. And almost every single thing that was being kind of witch hunted in Wall Street Bets and communities like that, almost all of them were like wrong or taken out of context, or, just focusing on like really just kind of a witch hunt that didn't pan out. Like, if I would have seen something where I saw that somebody was doing something really, really wrong, I would be the first person to whistleblow, call that person out, testify in court against them, whatever it takes. But most of the things that were being talked about really weren't there. And like, I hope you can believe me, and I hope that you can respect that, and I hope you can understand, look, man, I'm on your side. If you find something like that, let me know. If you find somebody doing something wrong, let me know. But a lot of times, because this is such a complex landscape, this is a very, very complicated business. In my opinion, way more complicated than it should be. It's really, really hard to see what's really going on and see what things really mean and really deeply understand a lot of these processes.
Interesting.
And I know that was really a long answer, so I'm sorry for hogging the mic here.
No, these kind of topics engender these types of discussions, and so we want all you out there to be successful. That's why Dan and I have been doing the show for over 100 episodes, out here talking to you guys to try to make you better traders, more successful, have lower risk, higher rewards. So hey, even if you don't agree with us on our outlook, that's fine. You should still listen, because it can help make you a better options trader in the line. That's what's important at the end of the day, not dissenting views on underlyings or anything else like that. And by the way, if you're intrigued, you should check out this article, Social Media Stars Who Move Markets, just came out this morning on the Wall Street Journal. Pretty interesting, a little bit scary stuff about just exactly some of the trends that are going on in some of these platforms. People need to talk up the audience, and they don't want to hear anything that is contrary to what they think. And that's never a healthy environment for anyone out there. All right, listeners, on that front, we'll have to kind of leave it there for this week. You guys have your thoughts on the overall meme palooza, how you're trading it, what you're doing, what you're not doing, your thoughts about this kind of stuff. Hit us up, let us know. Some of you guys have a lot of thoughts there on our poll question for this week. A lot of you in the Secret Club weighing in on PayPal's potential entrance into the brokerage space. Options Queen saying, my vote is no, as she's not a fan of PayPal and can't imagine them doing well as a trading platform. Interesting. Mr. Unlimited said he had the same vote. He's also not a fan of PayPal. Oh, and he also voted for 4750 in our S&P poll out there. Nichols also chiming in, not a fan of PayPal. So in our Secret Club right now, you guys not a fan of PayPal coming in. What do you guys think? You got not much time left. So if you're listening after the fact, this one's probably done at Options. But there's always a question of the week live there for you listeners. Get on over there if you want to play along in our which level will we hit first poll. That is still live. And before we go, Mr. Dan, if folks want to hit you up with questions or comments about meme stocks or anything else, where should they go? What should they do, sir?
Glad to help anytime. Make your way over to my website. MarketTaker.com is the best way to get a hold of me. You can follow me on social media as well. I basically post pictures of my cute dog on Instagram, which Kathleen keeps telling me I got to stop doing. But it is another way to get a hold of me. So, on Instagram, I'm just Market Taker Mentoring, all one word.
Or just search for Dan the Pizza Man. You can find him there as well, giving you his recipes for margarita and a nice Sicilian, Are you a deep dish or thin crust guy, Dan?
Oh, man, I hate to be sacrilegious because I am a proud Chicagoan, but New York has the best pizza. I know I said it. I'm going to take some flack for this from my fellow Chicagoans, but I love a nice, thin, greasy pizza.
I come from Connecticut, so New Haven style is still kind of my favorite. It's kind of a little bit more substantial than a New York style, but it's not as crazy as a Chicago style. And also, I'm lactose intolerant, so Chicago style would kill me anyway because it's just a cheese pie. So as fun as it is, I literally cannot eat it. So I go for the New Haven style with actually a nice Parmesan, or actually I go for the nice non-dairy cheese whenever possible. That's nice. That's our pizza tip of the week out here. And of course, listeners, Education Wednesday not over. That's it for our live portion. Brian coming up in a few minutes. He'll be live to tape, so you can check that out on demand a little bit later today. Of course, if you're listening to Options Bootcamp, you need to check out Options Playbook Radio. They're kind of the sister shows for each other, and they will walk you through these options concepts every way from Sunday, pretty much. So if you need to learn about options, you want to learn about them, have a show that takes you in all these basic to intermediate to advanced plays and everything else, Options Bootcamp is the place to go. And of course, we'll be back here tomorrow. This Week in Futures Options, as well as episode 2 of the Option Block, easy for me to say. Friday, of course, volatility views. And then for those of you in the Secret Club, we've got Options Oddities coming up after that. And then, of course, back again next Education Wednesday, another episode of Options Bootcamp. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.